And that means we are live here on our YouTube channel, Tackle Trading's Halftime Report. As always, welcome out. Got a full crew here today. We've got Mark, as always, doing great out there in his little abode. Cody's doing the production on the back end, and we welcome back Coach Matt.
I do not appreciate you, instead of asking me how am I doing, assuming how I'm doing now. Is that your new thing? I'm doing great. You're just skipping the middleman of the salutations.
It's the assumptive close, right? I mean,
the middleman of Mark himself. Mark's doing fantastic today. Mark's
becoming,
whoa. You don't know that.
It's becoming old hat for me to ask you how you're doing, and then for you to complain about how you hate pleasantries. So I'm just going to say you're doing great. I think it's a lot better. We get right down to business, you know. I got no problem with it. Matt, how are you doing, man? Welcome back, first of all.
Yeah, it's good to be back with the halftime crew. I've missed all of you guys. And like I said, it's good to be back.
Yeah. Let's break down the markets here, guys. A lot going on. Let's start with just the broad market itself. You've got a little green candle, inside candle. Obviously, we're in between a bunch of moving averages on the daily chart. The intraday charts kind of have a range here. We'll get all the technical analysis here. But a little bit of the relief rally is coming off of the backs of this $484 billion stimulus bill that we saw come through. I guess they're calling it Relief Bill 3.5. Is that what it is?
Oh, I just can't wait till we get Relief Bill 7.48.
We knew they were going to throw more money into this thing, Matt. It seems like they're actually becoming more hesitant about it and putting a little bit more restriction and thought into it. I even saw Rand Paul very critical about this concept. But the reality is the payroll protection program ran out of money. And the small business funding and all that kind of stuff, they had to come to the table and get this done. What was your reaction to the whole thing?
Well, the biggest problem with the first PPP, which, you know, typically when you say PPP, I think about the plunge protection. Oh, well, the PPT, I always think about the plunge protection team. But the PPP is the payroll protection program. And the initial payroll protection program, it was like, slightly over $300 billion came out.
350, I think, yeah.
The biggest problem with that is that bill was supposed to go to help small businesses keep their payroll up so that they didn't, have to lay off these individuals. But the biggest problem with it is it mostly went to corporations who have big accounting firms, and they were a little quicker to act. And so when these smaller firms came out, there was no money left on the table because all the money was already taken from, some of the larger corporations, including, corporations with hundreds and hundreds and hundreds of millions of dollars in market cap. And so they came out with another bill today, and it's $484 billion. Now, it has passed the Senate. It hasn't went through the House yet. And obviously the president has to sign the bill, but it does have $310 billion in payroll protection program, $75 billion in hospital relief, and $25 billion in additional testing. So, and they did put further restrictions on that $310 billion. So hopefully, and I say that hopefully because we know how efficient government can be at times, but hopefully that money goes to where it is needed, and that's small businesses.
I read a study.
Efficient government should ever be used in the same sentence.
Well, that's why I said the word hopefully 3 times.
We're going to trigger Cody, definitely about that. Here's the thing. I did read a study actually, and I think it was barchart.com. I found an article, and they were interviewing a bunch of these small businesses who qualified for the first round of funding. And it was a restaurant in South Carolina, and it was a shoe shop in this place and the other place. And they were talking to these guys, and basically they said, I can't hire everybody back. Most small businesses who actually accepted this funding, the whole point of payroll protection is that you actually keep people employed and that you will use the money for payroll. But like the restaurant owner was saying, listen, I used to do 100 tables a night. We know that demand is going to be down. I want to get everybody back to work within a few months and whatnot, but I got to see how my business works. I wonder what's going to happen with these companies that take this money if they don't actually bring workers back.
Well,
go ahead, Matt.
Think about it from the company perspective for a second. When you're trying to build your company, you're not building it for today. You're building it for a year from now, 5 years from now, 10 years from now. Mm-hmm. And so we simply do not understand the economic environment even 3 months from now, let alone 6 months from now and a year from now. And so when you're mapping out your cost structure and your margin and the cost for doing your business, it's very difficult because labor cost is the biggest cost to a corporation. And so in these short-term funding situations, yes, it helps in the short term to help, keep your payroll active. But 6 months from now, you can't guarantee that you can still run that same type of company from an economic perspective. And Tim, it's not just that. What about all these other failing corporations and failing small businesses that are simply taking loans just to maintain business over the next 2 to 3 months? It doesn't fix the underlying problem. Take the airlines for a second. They're taking billions upon billions upon billions of dollars in bailout money, but it doesn't fix the underlying problem. If you don't fix the underlying economic problem, none of this matters.
Matt,
Yeah.
it is nice to have you back, so I don't have to do all the heavy lifting.
Well, I mean, here's the thing, Mark. You and I, we've all talked about this. We were talking about it in pre-production. It's going to be really interesting to see how the details of these programs end up working themselves out. And I actually still need to get clarity on this one item, but I read about that $1,200, stimulus check people got, that actually it applies to your next year's taxes. Now, that doesn't mean necessarily that you're going to owe them money next year. I haven't got the detail on that, Matt, but that's so much about these programs we don't know about yet. Which is
take
why
the mortgage relief assistance program, where you have the forbearance program. For consumers that are struggling to pay their mortgage, they can have a 6-month forbearance. But Tim, at the end of that 6 months, you have a big time 6-month balloon payment due immediately. And so a lot of these bailouts and stimulus programs that are coming out, some consumers might look at and be like, I don't have to pay my mortgage for 6 months. But then they have a balloon payment in 6 months. You might see record numbers of foreclosures based on what the government's doing.
Well, and I think the assumption, which is a dangerous assumption, is that those companies will then refinance those loans and then allow you to get back on this.
Listen, if you want to believe the promises of corporations that are not legal binding, then that's up to you.
Yeah, I think a lot of these programs are definitely very dangerous. And when we don't know the details yet, they're just throwing money, trying to fix a short-term problem. Obviously, the markets like it here today, back up 2%. Matt, give me a read on that technical chart if you can on an intraday. And then back on the daily, I'm going to ask you the age-old question and see if I can trigger you a little bit. Was that a pullback on the daily chart?
Well, we'll have that debate here in a second. Let me break this down from a technical perspective very quickly. Obviously, the first couple of days of the market today saw the market sell off quite aggressively, down about 4.8% on the week so far. As you're seeing this market come down, you see this trend line, really kind of steep trend line coming on Tuesday, coming down as you see those highs kind of kiss off the highs, kiss off that 20-day moving average as well. But what happened on the overnight action, as you start coming into the Asian markets here and you start coming into the European markets, right here, you see this trend, this steep trend coming down. You see it double bottom right there at about 27.20, double top right there at about 27.45. Once you broke out of that, right when the European markets start opening up, that's called the bank open trade, by the way. Once that starts opening up, you start to see the market kind of price appreciate on the overnight action. And the market really hasn't done much since the cash open. It's just kind of been hanging out. But there's a lot of news to cover in the market today. We had a lot of earnings reports as well. And, the markets have rebounded a little bit based on some of these positive earnings reports here today, but also with the slight rebound in crude oil has obviously helped the market a little bit today as well.
And we will come back to the earnings companies in a bit here, but let's break this market down. And simple question, Matt. I mean, if you're a bull, you were looking at that probably just as a little 2-day hesitation. You're still above the short-term 20-day moving average, but you're below the 50 and below the 200. There's a lot of ways you could approach this as a trader, I'm sure. What's your read on this chart here? Are we just in a wedge and we're waiting for news? I mean, what's your expectation?
I think we're in a little bit of a short-term consolidation right here, T. And you asked me the question about the debate between a flag-based pattern, a retracement, and a high base type situation. When you're really looking at that, when you're looking at the difference between a flag, a retracement, or a high base, you're really talking about the percentage of the decline versus what happened on the upward movement in price. And so when you're looking at this upward movement in price, a little bit of a 2-day pullback here, I don't see that as a retracement. I don't see that as a flag. I see what we're seeing over the last week really is just a little bit of a short-term consolidation. Maybe you can call it a little bit of a high base, trying to figure out some of what is that next catalyst to really kind of drive that market back up. And so I don't see this as a retracement. I don't see it as a flag. I see it more as just a little bit of a short-term consolidation period, trying to figure out if this, quite honestly, if this 20-25% market relief rally we've seen over the last month, is it legit? I think that's an open question.
I think it's still an unanswered question for sure. There's so many fundamental and technical arguments here. I mean, technically, Mark, on this daily chart, that's just a little bit of a mess right now. Consolidation.
Listen, you're Timmy the Bear. I love how, isn't Timmy so diplomatic? He's like, yes, it's an unanswered question. and I think bulls are stupid. That's what Timmy the Bear really just said there.
We need the t-shirts. Everybody's calling for these t-shirts,
Wow.
by the way. I got 6 messages saying, hey, I want a Timmy the Bear t-shirt. I need like some art drawn up, all that kind of stuff.
It just works. Timmy the Bear. It just works. I might actually be more bearish than Tim, but Timmy the Bear, Matt the Bear doesn't work nearly as much as Timmy the Bear.
I think even the most bearish traders in the market, though, have to admit that the market can continue to go higher in the face of this because we're in a short-term uptrend. I mean, there's no question about that.
How many times do we have to, look at the historical situations in subprime market or .com market or any bear market where you have these types of rallies and sometimes it's based on a little bit of a hope, sometimes it's based on a little bit of FOMO, but at the end of the day, that 50-day moving average, Tyler Craig did a wonderful webinar. I think it was 2 Wednesdays ago, actually, where he was talking about the bear market survival guide, and he did it on YouTube. So if you guys want to go check it out, I thought it was a wonderful, and he talked about that 50-day moving average being that kind of that battle zone between that bull market and that bear market. And that's really kind of where we're hitting on in the S&P, right? S&P 500. You're really struggling right now at that 50-day moving average. But Tim, that's not in every index. If you're looking at a buyer's opportunity, in my opinion, it's not in the S&P 500. The NASDAQ here looks so much better, in my opinion, than any of the other market indexes.
It's the cleanest chart. Is the cleanest chart. And it makes the most sense, by the way. You got a lot of firms that are in tech that have just been very, very hot, quite frankly. I mean, Netflix and, the Teslas and all those kind of things. I mean, we might think it's irrational that Tesla's run as far as it has, but those runs have gotten all those companies back above moving averages, So NASDAQ definitely is the strongest here, Mark. In fact, you would even point to some clear air there, quite frankly.
No, from a technical standpoint, when you get above those moving averages, all it takes is a little momentum. All it takes is sentiment. All it takes is whatever. Doesn't have to be rational. Doesn't have to be something you agree with. But we see this. I mean, pull up Tesla's chart. Bank of America Securities, since you brought up Tesla, downgraded Tesla today from neutral to underperform.
I saw that. Bank of America even put a price target on them of $485, which means they think it's $250
up today.
Well, no, and this, Bank of America, they're becoming very tackle trading-esque. They yesterday put an 18-month price target of gold at 3,000 and have downgraded Tesla. Bank of America, you're my new favorite bank.
Yeah. Back to markets here for just a second. We'll get into individual companies. Matt, give me a look at oil if you can. The futures market actually on oil is rebounding a little bit here today. USO, we've got some news on that. Mark, what's going on with oil in your opinion right now? What are we going to see over the next couple of days, just from a volatility perspective? What are you paying attention to? First of all, this oil thing is very long story playing out. Inventory numbers, my goodness, we have so much news just in the last 24 hours. So you have one oil analyst who says that the WTI June contracts could crash as low as negative $100 a barrel. You have Donald Trump ordering Chevron to start winding down production in Venezuela. Trump tweeted saying he's going to blow up some ships in Iran, creating a little short-term bounce. Get used to those type of geopolitical conflicts. The lower oil is, those type of rumors, those type of escalations, those type of, whatever it may be. You have the biggest ETF in the world announcing a 1-for-8 reverse stock split. We can get into USO for a second. You had the crude oil inventories up 15 million barrels. I think it's the 13th straight week of inventory build. We've known about the inventory problem for months. We've been talking about it. Everyone has caught up with tackle trading, and we now know about the storage issue, something that we've been talking about for a month here at Tackle Trading. So you got a lot going on in oil. It is not a boring time in oil at all right now. Mm-hmm. I don't even know if the chart really matters much here, guys, because there's so much short-term volatility and news that's just going to drive it. I mean, you're in a clear downtrend, but it's not like you can find any support in there, Matt. In fact, out of all of the oil stories, there's a lot that grabs my attention. The USO thing I want to get into in a second, but the negative strikes, the CME group announced that they might be coming out with negative strike prices. And in fact, they are going to do that. Seeing negative numbers was historic a few days ago. Negative option strikes, I never thought we would see that. I could not have comprehended that. Matt, what's your read on the oil markets right now? Obviously, they're in free fall. They've been absolutely destroyed. What's your take?
Well, my first take is, I was on CNBC earlier today, and the headline was oil accelerates its rebound up 20%. And then when you look at the chart, you're like, oh, Lord Almighty, that's so ugly. But my read is very simple, and I think it's very consistent with a lot of other people's. Mark, your analysis on oil, Tim, your analysis on oil, whether you're Mark the bull or Timmy the bear on oil, it doesn't matter. I think we all understand that there's really kind of three issues happening in oil right now. The geopolitical situation aside, you have a demand shock. Now, that demand shock was happening before coronavirus. Obviously, the corona situation accelerated that demand shock. The second one, because of that demand shock, you have an excess supply problem. And that excess supply problem, as Mark points out, how many straight weeks, Mark? Was it 13 or 15?
13 or 14 now.
Okay, 13 or 14 consecutive weeks of increased buildup in the supply side. So you have excess supply problems. And then you have
inventory build. It started off as a little adolescent. It is now a petulant teenager. On how long it's been going.
And because of that excessive supply and lack of demand, that obviously is going to have storage issues. And so those are the three main storylines that you're really seeing in oil: is one, demand shock; two, excess supply; and three, storage issues. So when you're looking at that situation, it really does put a lot of pressure on oil. And obviously, I don't think anybody was predicting that we'd see negative prices in oil in that May contract. But Tim, even on the podcast on Monday, we were talking about negative prices in the June contract, well ahead of what anybody else was doing, and quite frankly, you might see that in more other months. And that gives me a little concern for USO, to be quite frankly, because as they roll those contracts out to further expiration dates, you're rolling the risk into those further contracts as we start to see the plunge in oil. To me, I mean, the biggest question that I think a lot of people have in the oil market right now is the same question that I think a lot of people has had in the stock market over the last 2 months. Really, is at what point do you start buying oil? Because even though a May contract or a June contract can go negative, crude oil can't go negative. The CL contract can't go negative. The front month contract can go negative, but oil itself cannot go negative because it's a commodity. So the biggest question I think people have is, at what point do you start buying? And I don't know when I said it, Tim, whether it was oil at $30 or $40. I can't remember when I said it, but how many times have I said over the course of the last 3 months, wake me up when oil's between $10 and $15?
A lot,
right? Yeah. And that's where we're at right now. We're right in that range of that $10 to $15 range. And so I think, like a lot of people, I'm sitting here today wondering, okay, at what point do I start looking at, adding to a position or increasing a position or taking a position in the oil market? And to me, I'm not going to be the buyer of a dip. That's not me. I'm not going to buy after a 50% decline in price in one day. That's not me. I'm not going to buy when a lot of people believe that there's going to be negative prices in the June contract, the same way we saw negative prices in the May contract. And I'm certainly not going to buy when in front of what could be just horrific economic data for the next year, regardless of whether or not you open up the economy or not. You can open up the economy. It doesn't change consumer behaviors. It doesn't change corporate behavior. So, in terms of this, I think the open question is, at what point do you buy? And I'm going to focus on the technicals here. That's what I'm going to focus on. I need to see slowing momentum in this trend. I need to see double bottoms and double tops start to form. And if I don't pick the bottom here, if I don't nail the bottom at $10 or $6.5, I'm perfectly fine with that, because if you get a breakout of 20, it's most likely going to go to 30. So I'm going to wait for the technical condition to slow down and focus on that, because that's what's going to tell me the truth of this market.
Yeah, I have no FOMO with this one. I got to read you guys a text. Actually, I got a text. One of my buddies, he drives truck for a living, drives a bread truck between Salt Lake City and Vegas and delivers bread. He sent me a question. He said, question of the day, should I take 50,000 and buy oil futures at $0 a barrel? If the economy bounces back and in 2 to 3 years from now, do I make 2.5 million?
No, you don't.
I haven't answered him back yet, but I'm going to give him a call after the show and talk.
Call him and tell him he's going to lose all his money.
You don't get delivery of the WTI contract, Mark. It's not like.
Why do people think that's how it works? I saw that on
Twitter. If
Twitter.
it's that easy, other people will be doing it. Every time I hear someone with this like brilliant idea, they're like, I'm going to do this and it's going to make so much so quickly. It's like, no.
I mean, I get
But
it.
it's okay. The
I
only
get
way
it.
that works is if you take physical delivery, store it in your basement, and then go find a contract to sell that oil to an oil refinery. That's the only way
They don't
that
let you
works.
store in your
And
basement.
even your oil refineries aren't doing that right now. So why do consumers think they can do it when Tesoro's not doing it, when Valero's not doing it, when Phillips 66 isn't doing it, but an average American consumer can do it? Come on, guys, let's start thinking a little more critically here.
But it is the question I keep getting just in that anecdotal way. When do I buy oil? When do I buy oil? Is there a big opportunity here? Give me USO if you can.
There's always a big opportunity when markets go down. It's about wondering, okay, at what point do you start taking a dip? At what point do you start dipping your toe? And I just think the biggest mistake I think people make when we start to see bear markets form, and I'm not talking about equities, I'm talking about, here on crude, is taking the plunge too soon.
Mm-hmm. Mm-hmm. Why is USO down and CL up, Mark?
Well, I mean, you have a couple things. First of all, I am dipping my toe, full disclosure. I have naked puts. I'm adding to that position today on USO. Is there a short-term risk to the downside in anything you do? Of course there is. Am I dipping a toe with like 5, 6, 7% of what? I mean, it's a true dip. It's a true dip. The mistake I see people that want to do dip, they don't dip. They shove the chips.
Mm-hmm.
Like that is irresponsible in oil. It's quite frankly irresponsible, I think, in anything you do, shoving the chips all in, unless you have some I don't know, magic soothsayer ability. The thing that I loved the most out of USO today was something that I've been advocating the last 2 days. What if I was running a USO? This is what I do. And they are rolling out of those Junes into July and August contracts. And so what that for me does is it takes away that, can USO go to zero? Sure, AT&T can go to zero. Lots of things can go to zero. But what it does for me is it takes away that event we just saw 2 days ago, the likelihood that USO could blow up in the next 2-3 days, which was a very real possibility. If oil markets get spooked, those June contracts go to negative, it could blow US up. Now, if July's and August's go to negative, that same possibility remains. I'm aware of that. But it really reduces because you didn't see the forward months on Monday go negative. You didn't see them move, other than a normal down day in this market. You saw those front months just get obliterated. -40, all the headlines, why you have people texting you, Tim, should I buy $50,000 worth of oil? Which is hilarious, right? But USO rolling out today, the price action today could be a combination of a couple things. One, I mean, that's a lot of fees. That's not an easy transaction just to roll future month. They might be incurring a lot of administrative fees, lowering the overall value of the fund to avoid a potential Armageddon situation for a month. I think that's wise, in my opinion. You also, on a reverse split, a lot of people are like, I'm done. I'm not getting reverse split. I'm done with that. 8 for 1. Nope, I'm out.
And so when is that split happening, by the way? Is 8 to
August
1?
20.
It's
August 20. I'm not August. April 28th, I believe. So
6 days, like next Monday,
next Tuesday or so. Yeah, early next week.
Okay, so that puts 8 to 1 right now. That puts us what, at $20 on USO right now?
That would be the math, 20 and change.
Yep. So you got to think about, okay, if part of this planning is going to be doing cover calls down the road, stuff like that, guys, you got to be able to do that.
Oh,
math,
it creates a practical mess on reverse splits for individuals that's saying, like in this one, for example, me, I'm like, I'm willing to lose 600. I'm willing to lose 900. I'm willing to lose whatever, these smaller amounts, and say, yeah, whatever, I can take that risk. All of a sudden, I get some of the management abilities that we love as commodity traders, selling naked puts, selling calls, and not wanting to risk money. It takes a lot off the table.
I got to be blunt. There's too much.
All that means though, Mark, is the oil better rebound by August or USO is in big time problems.
But
they're making a big bet on oil rebounding by rolling those contracts. Now they have to roll those contracts, obviously.
They have to. It just what you saw on Monday gave them no choice. It
Mhm.
said, you think about it as a protective put. Think of it as insurance. Think of it as all of the things we talk to investors and traders doing as far as being responsible in their money management. They didn't have any. After what you saw on Monday, they had no choice in the matter. They had to do it. So, yeah, no, but no,
USO bought time. That's what
they,
happened.
they
They
bought
bought
time
time.
for production cuts, for things to
Yes.
happen in the oil
For the
markets,
economics to improve, all of that. They bought
all
time.
of that. They bought time. And I totally 100%, I'm as a USO investor, I am totally enthusiastic about their decision to do that. Well, like unequivocally enthusiastic. It was the right defensive move in this environment.
I agree
yeah,
with that, but there's still massive risk to this thing completely going bankrupt still in the short term.
But
I mean,
I
what
just
I
don't
read,
think that's a bullish thesis, is that they're buying time. I think it's a neutral thesis. But if you believe oil is going to rebound long term, yes, it's obviously a positive thing.
isn't the reverse split a huge red flag that they're trying to get retail investors to feel more comfortable holding it at higher levels?
No, we called this reverse split 2 months ago.
We knew they were
Everybody,
gonna do it.
dude, it's been so popular in the oil market. You've had 2 OIH reverse split.
Yeah.
You had the producers reverse split. You've had other ETFs in oil. It has been a trend going on the last couple of weeks. Very popular. I don't see nothing changes in the value of anything like reverse.
No.
What did OIH do? Like $1 billion for one reverse split.
Mhm.
The average share isn't worth less. There's just fewer of them.
There's
And
just too much I don't know here, Mark. I mean, even how much of the oil contracts were rolled into August?
I
only read,
understand
like,
you're easily confused. And
I
so,
am. I need clarity.
I get it.
I read a
You know,
statement they only put 5% of their holdings in the August contract.
No, but most of it is I'll give you the raw numbers. They're the pending trades that they had of yesterday, 52,000 approximately July contracts that are rolling into, only 7,000 August. So still heavy July, which is 2 months out, and jettisoning from 90,000 June contracts. So a fewer amount of contracts total, and just jettisoning out of those June contracts in just like, we're done, get out. We hate it.
But again, this is something that if they did not do, they're risking insolvency.
Yeah, I mean, it's once again, it's like when support breaks. When you're a trader out there and you have a long-term investment and a clear area of support breaks, if you don't buy a protective put, guess what? You're looking at tens and tens of thousands of dollars of losses like traders had in February when those support levels. Well, I'm not going to do anything. I'm just going to see what happens. Well, yeah, congratulations. Margin calls, accounts blow up. All of those kind of things happen if you don't take defensive action when you get a clear signal. This is the type of money management that we teach at Tackle Trading. This is the type of money management, and you can go back and watch those classes as if you're a pro member back when the market was at its highs. We ran a week worth of specials saying, hey, protection, deleverage, all of these things, knowing the risks that the markets were about to face. If you are new to our show, welcome. Great time to go back and review those classes. Email me at team@Tackle Trading for a 15-day free trial. Go to the store page on Tackle Trading. We were calling defensive actions before the market crashed. Now, if you didn't take those, well, you were just gambling at that point. And that's what USO is doing right now. They're saying, we don't want to gamble. We don't want to gamble.
And I love what
Mark, you very quickly, Tim. Mark, you mentioned margin calls, right? It was reported today that Interactive Brokers lost $88 million yesterday on margin calls that investors did not have the money in the account to cover the margin call. Now, most of that at Interactive Brokers is hedge fund money. It's not individual investor money. We're not talking, TD Ameritrade or E-Trade or Scottrade or Fidelity or anything like that. We're talking Interactive Brokers where they really do market to hedge funds. And so to me, that tells me we have not seen how much pain is actually out there based on what we saw transpire in the last 2 days in the oil market yet. We have to see what happens there first, in my opinion.
Mhm. I agree with that. Maybe the most fascinating storyline in the markets, even amidst all of this stuff going on, is what's been happening here in oil recently, guys. We'll keep looking at it each and every day. By the way, if you are new to our channel and this is the first time seeing us, welcome as always. If you like the show, give me a thumbs up, and if you can, click that share button, get it out on your Twitter feed or your Facebook feed or whatever it is. Let's get the word out. Keep building our audience here, guys. Let's move on to gold real quick here. I got a call from my mother. We're getting all kinds of calls these days, guys. I mean, there's a lot of interest in the financial markets. You know, volatility begets the interest. I got a call last night. Hey, Tim, where should I put some money? And I said, well, Mom, I mean, if you don't know what you're going to do with it, we're talking investing long term. And I walked her through it. And I did make some arguments for gold here, Matt. We'll see what she ends up doing. But I did talk to her about gold. I think gold is one of the safest in terms of fundamental premises in the marketplace. I love the pattern here as well. Matt, what's your read on gold right now?
Well, we broke this down in the podcast on Monday, and I said if there's one chart I really, really love in the market right now, it's the gold chart. And the reason I said that is because what you're seeing here is a standard bullish retracement. So when you're talking to me, Tim, about the S&P 500, if this is a retracement, no. When you're looking at a standard bullish retracement in the market, and if you don't know what a bullish retracement is and you want to learn what a bullish retracement or a flag-based pattern is, I strongly encourage the step system over there at Tackle Trading. But what you're seeing here is that standard bullish retracement coming back down. Now, when you're looking at a standard bullish retracement, you got to have a certain number of days down and you have to have a certain percentage on the way down as well. And so as you're coming down into support here, you find support right there on that 20-day moving average, but it also coincides with the old historical resistance point right here at about 1690 by 1700. And what you're really looking for is it's coming down into support is you're not looking to buy on that big red candle on the downside, because support is only support when it is defined by the market. We can look at support levels from a historical perspective to give us a understanding of where we're looking to buy, but we don't want to be the first person to buy. We want to follow as that big money comes in, that institutional money comes in, that hedge fund money comes in, the big player money comes in. And as you start to see that happening, you see this downward movement in price, you see a little slowing momentum, inside candle, hammer candle, upward movement in price. That's what you're looking to see here. And when you break it down on that 30-minute chart, you can kind of see that double top right there, right about 1710, breaks out, comes down, retests that 1710 mark again, price appreciation right there. So you're looking at this chart. It's a very clean chart in my opinion. And Tim, every text message I've got over the last couple of days as well, it's like, should I buy oil? And my answer was, no, don't buy oil, buy gold. If you're going to buy one thing, buy gold. That's the safest in my opinion right now. And you're starting to see that price appreciation. Now we might see that I want to see that volume start to tick up. Obviously, we still got a few hours left in the trading day, but you're starting to see this standard bullish retracement with confirmation here. And Mark, you talked about Bank of America's price target around 3,000. I believe my price target year-end date was, I think, 1750 year-end date, and now we're only sitting in April. Yeah, I think 3,000, maybe not by the end of the year, but 2,000 by the end of the year. I don't see there being a ceiling on gold, to be quite frank. And the only inflationary product that I actually believe in at this point is the gold thesis. Oil is not an inflationary product any longer. It is gold is the inflationary product. I love the technical pattern, economics, fundamentals, behaviors. Everything leads to price appreciation in gold, in my opinion. Now, you're gonna see some big down days in the market over the course of the next couple of days. There's no doubt about that. And gold will take a hit in those environments. But every time gold has taken a hit in those environments, it has recovered its price faster than any other equity out there in the market, any other equity tradable instrument in the market right now. So yeah, the bullish thesis on gold is stronger today, in my opinion, than it has been in quite some time.
Cody, who's winning the race to sell another naked put on gold right now? Have you got there yet?
Oh, I
saw the look in Cody's eyes. Cody's like, I'm going to do this again.
Gold
I did sell some yesterday after the show. There was just the prices there, the charts there, everything looked good to sell naked puts.
I've been saying this for 2-3 weeks, using this exact phrase or some version thereof. Tell me what you think. There is nothing I feel better about right now from a cash flow ownership perspective than selling naked puts on gold at lower deltas. Like there's nothing in the market I feel better about. What do you feel about that statement?
I don't disagree. There's nothing I have more confidence in the market than gold. Now, the only question is, how do you want to play gold? I mean, through
That's the only
naked
question,
puts,
right?
it's a very conservative type strategy where you can bring in some cash flow. And, you know, that naked put strategy really fits your investment thesis really, really well, Mark, as you like to buy on the dips, right? So you sell a naked put at a price level that you want to take possession of the underlying instrument on GLD or GDX or whatever instrument you're using, or do you want to play it straight, straight from a directional perspective? And so it really comes down to probability versus risk to reward. And so when you're doing a naked put on gold, you have a much higher probability of successfully cash flowing. And if you do have to buy gold, you buy it at a better price point, in your opinion. Or you can play it directionally, take on a little bit of more risk, but you also have a much higher return when you play it directionally. So it's just a matter of how aggressive versus conservative do you want to go in the gold market. You know, me, I'd probably go from a more of a directional perspective. You and Cody go from a more of a theta or a, selling cash flow. Either one is good.
Yeah, and I love the ETFs around it. I mean, one of the questions popped up recently, Matt. When do you get more interest in the miners? Look at the GDX. I mean, the miners have started to pop here recently, and they just broke out
right now.
Yeah. I mean, that looks good right there. It does.
Well, let's look at this really quickly. When you get more interested, you're currently breaking out of that 32 handle right there. That was the old resistance point here. You also had a resistance point right there at about 31 that got retested on the overnight action at 31 here. You got to call that a breakout as of right now. Now, obviously, it's at the high point of the day. I want to see that close above that 32 handle for a breakout. When you're looking at on that weekly chart here, you're starting to see it break out on that weekly chart as well. So when do you get more interested in the miners? I'm getting more interested in the miners right now.
Day by day by day, they're starting to look,
including this one, Newmont Mining.
High base breakout.
That's a high base breakout.
If you're looking for technical training, obviously, we've got that step course over on tackletrading.com. It kind of goes through the 4 core patterns that we teach in that course, and it's a great way to learn how to play those breakouts. Dollar's not doing much here today. I got nothing really on currency. I mean, you can peek at it if you want, but it's about to maybe make a move here, Matt. It's got a little ceiling there that needs to break out of, but I want to get into some individual companies. There's actually a lot of earning stocks that we need to talk about here today. Netflix leads the way, number one. We highlighted a look at anything on the dollar there, Matt. Don't want to rush you there.
Matt, you just
no. I was catching up to you.
You just convinced me to sell a naked put on GDX. So.
Well, honestly, Mark, I mean, when you're looking at cash flowing in the gold market, now there's not a one-to-one correlation between GDX to GLD, right? But it's fairly close. It's in the 80%.
Now, granted, I sold it at $23. The naked put, so
yeah,
that's just my way. But here's the thing, Matt, is like sometimes is like on how you play it. Like on gold, I wish I would have not sold naked puts way out of the money. I wish I would have just bought. But on oil, I'm really happy that I sold naked puts way out of the money.
It works both sides, right? It works to both sides of the equation. But the difference between GLD, which is the ETF that does track gold. Now, USO, it tries to track oil. But because they have the rolling of the contracts and so on and so forth, it doesn't do a one-to-one correlation between USO and CL. And we saw that today, CL up 20%, USO down 10% today. GLD does do a fairly decent job of tracking the underlying commodity because they own the underlying commodity, and gold doesn't trade the same way USO does in those front month contracts. And so GLD does match gold, from a correlation perspective, much closer than USO tracks the oil market. But when you're looking at the difference between a naked put, say on GLD versus a naked put on GDX, you're really talking about the margin it takes to secure the position, number one, because GLD is a more expensive ETF than say GDX is. And I'll just do like 10 delta contracts here. So when I'm selling a naked put, say at 147 on GLD. I'm willing to take possession at 147. I'm going to get paid 58 cents a contract, and I got to put up $1,700. And so you're just not going to get the same type of return on investment on GLD that you would say on GDX, which is the gold miners contract. Now, the gold miners don't track GLD 1-to-1, but it's closer than USO tracks on crude oil. But on this one here, much cheaper ETF, I'm selling a $26 put option here. I'm getting $30 on the contract, confirm and send. I'm only putting up $261 in margin. So because it's much cheaper of an ETF, the margin requirement is going to be also cheaper. Because GDX is more volatile than GLD is. If you look at the GDX here, it's got an implied volatility rating of 67. GLD here on that same month contract in May has a 30%. So you have half the volatility on GLD that you do on GDX, which means you're going to get a higher credit on GDX than you will on GLD. But because of the volatility, you also have a little bit of higher risk.
You know, for years, though, the volatility on GLD was like 10%. I mean, the volatilities across the board are all up. It's a great point, though. It's a really, really good point. Those IV numbers are very helpful to take a peek at. Yeah, definitely, guys. I mean, let's keep talking stocks. So Netflix, Matt, let's take a peek at this. Netflix had earnings last night, and they came out and actually had a very good report. They reported a couple of numbers that I read, up about 15.8 million subscriptions. Mark, you were one of them. I believe a lot of people watching that Tiger King and streaming all these shows. But they did miss some numbers as well, kind of a mixed report. I wouldn't say it's a bad deal here. I mean, it's a red candle, but you're only down 3%. Matt, what was your read on Netflix earnings?
Very impressive on the subscriber growth. Very impressive. They came out with 15.8 million in new subs. But if you've been tracking Netflix for the last 10 years like we have, Netflix likes to throw a lot of cold water on their own earnings reports, Tim. They've done it. They've done it all the time. For some reason, I still remember, and I've told the story a lot of times, but I remember one time Netflix posted a really, really good earnings number. It pops 50 points on the overnight action. And then Hastings, the CEO, comes out and he says, I don't understand why our price is as high as it is. And Netflix immediately gives all of that money back. And so it kind of happened the same way last night. Netflix reports their earnings last night, comes out, and they announced 15.8 million new subscribers. And then the company comes out and says, well, that's not going to be the real number moving on into the future. So don't expect this to be the new norm, which is a true statement. I don't think we can expect 15.8 million new subscribers in Netflix every quarter, especially if we start putting people back to work in the economy. The numbers, though, when you actually look at the numbers outside of the subscriber growth, were not that good, Tim. They missed on earnings per share. They did have a slight beat on the revenue numbers. Earnings per share came in at 1.57 versus the expectation of 1.61. So a slight miss on EPS numbers. Revenue came in line at 5.8 versus 5.7. Revenue grew 27.6% year over year, and they did increase their guidance as well. So I'm taking the report itself as a slightly positive report, even though Netflix is obviously down about 3% on the day, which is nothing in comparison to what Netflix can do. What is interesting on Netflix is, where did it come down into? It came down into Mark's girlfriend. It literally kissed Mark's girlfriend here on the 9 on the drop in price, trying to recover its price. When you look at the intraday numbers, you kind of see that come down into that support level. And it's really kind of setting up an interesting pattern here, a little bit of a consolidation period over the last 3-4 days in Netflix, a high base type scenario. And whenever I'm looking at that high base type scenario, I'm not looking to buy that dip. If you're looking to add positions, I think adding to a position on Netflix from a technical perspective specifically starts with above $450. You really see that $450. It's a significant whole number. It's a high price from 5 days ago at $449.52. So I think that if you're looking to add to a position, take a position, from a trading perspective, I think you got to wait for this high base to really kind of form and then break out of that high base. And like Coach Frank says all the time, I don't want to see a 3-4 day type high base. Give me 5, 6, 7, 8 days in that high base. It creates a really kind of wonderful environment, because what happens when you have a prolonged high base is this RSI starts to come down a little bit, giving you a little bit of more room to run as it does break out. So I think Netflix should be on everybody's everybody's watch list, no doubt about that. But don't be too quick to run into something just because you want to chase it because you might have missed it in the future. Wait for a proper setup, wait for confirmation, and then you have a wonderful opportunity, in my opinion.
You know what the most bullish thesis I have the event on Netflix is? It is President Trump tweeting that he is pardoning Joe Exotic, and Netflix announcing Tiger King Part 2.
Oh,
Netflix goes to 1,000 in that scenario.
Somebody asked him
that, that way I would lose my bet to you, Mark.
You know? Come on, Trump. Hey, you tweeted that you're going to blow up some Iranian tankers.
Mark cares about is winning his bet against me. That's
listen,
all he cares
I've
about
embraced President Trump's Twitter. I'm now, hopefully, I asked for it. He did. He said he's going to blow up some Iranian tankers. I asked for that yesterday. Now I'm asking for the Joe
Did Mark
Exotic.
really ask for Trump to tweet he wants to blow up Iranian tankers?
No, not specific. I just said do something with your Twitter. You know, help me out, Trump. I did.
Part of Mark's bullish thesis.
That he did. He did say that. He was like Trump needs to tweet something out that's going to help out my positions, and
he did.
Well, I Mark's just more open and vocal about it, but I think everybody kind of feels the same.
That Iranian situation is scary, by the way. I mean, and he did come out today and talk about how if oils are bad,
that's fine. How many times do we have to overreact to Trump talking about Iran?
Dude, I don't like it.
Every time I have
it, but you don't like much.
I'm the happy dude. I'm not the curmudgeon. I'm not Timmy the curmudgeon. I'm Timmy the bear. You know.
To be honest, though, like Iran's that annoying kid that always picks on the other kids at the playground, and then just the actual big kid every once in a while goes and puts him back in his place and says, "All right, you sit down and shut up." And
they just want to poke the bear a little bit.
What's needed. Yeah.
Cody, you have never said a more American thing in your whole life.
Are you kidding me? Cody bleeds America.
No, a more Texan thing either. Like well, just shut up. We're gonna just slap you around if you just get out of
more corporate earnings. Let's move on here, guys. Chipotle beat AT&T, Texas Instruments, a bunch, Delta. There's a bunch of earnings here today. Chipotle actually had really strong delivery numbers, Matt. Their digital orders, things like that, coming to pick them up. You got to be impressed by this. I don't trust this rally at all. Let me be very clear, but I'm not a Chipotle truther. I'm not a believer here in this type of thing, but they did come out and had a very, very strong report.
I am a Chipotle truther. I am. Yes.
Are you? You believe?
Yes, I always have been.
Yeah.
Always.
Well, we can flip it. I mean, maybe they'll just sell burritos online, Matt, and they'll deliver them to all of your, all your buddies and all that kind of stuff. I don't see anything here. The earnings.
The numbers were actually really good, though. I mean, now again, obviously, with all of these numbers, we have downgraded these numbers coming into earnings reports, right? Mm-hmm. Everybody knows that. And one thing I will say about this earnings season is, when did we shut down the economy? Was it March 10th?
In that ballpark,
like some second week March type area. It doesn't reflect the true nature of what's happening, because obviously you have July, you have January, February, and you have March coming into that reporting season. So it only reflects a little bit of what was happening towards the tail end of the shutdown. But if you just take the numbers for what the numbers are, and obviously the market it's up 12% today, up $100 on the day. So you got to take the numbers for what they are. They did come in at 3.8 on the EPS numbers versus the expectation of $2.50, which is a really, really good beat on earnings per share numbers. Revenue came in line at 1.4 billion versus 1.4 billion on the expectation. The revenue only increased 7.8% year over year, which is not really good for a growth type of stock, but the numbers were actually decent. And you are seeing a nice little breakout of the short-term price action. And if anytime you're looking at playing a post-earnings report, it's really bar by bar. And that's what Coach Slavik at Tackle always says, just bar by bar that. And what that means is you play the momentum of it if you're looking to play it. And the momentum starts with above the high of the day. Now, the problem with that is you're going to be running into a very, very important resistance level right there at about $940. So it's going to be hard, in my opinion, as a trader, to map out a positive return versus risk ratio when you're up $100 on the day and you're staring at a $940 all-time high on Chipotle. So that's going to be interesting. But the delivery numbers for Chipotle were very impressive.
Yeah, but let's call it. Let me be the dose of cold water on this. Listen, call me old-fashioned. I like revenue numbers going up. revenue numbers did not go up year over year. They might have hit expectations, which is always a comical game, but Chipotle still saw lower revenue, i.e. lower sales due to COVID-19. If you believe that COVID-19 is going to be dealing with us and affecting consumer behavior, like, I'm just not the type of guy. Once again, trading anything, right? Chipotle is one of these Beyond Meat type stocks, and sorry, Chipotle, I don't mean to disparage you on that.
Yeah, that was
because you actually make money, and so I like companies that make money, right? So you're a profitable company. You got a strong brand. You have a loyal consumer base. That loyal consumer base is shown to grow over time. So there's a lot of wonderful things about you, right? But call me old-fashioned, like, jacking up a stock to all-time highs amidst declining revenue numbers, amidst a global pandemic. Well, call me old-fashioned. Call me old-fashioned. I'm just not interested.
I mean, that's more like new age, Mark. Old-fashioned value investors, I guess, for sure. I'm with you. I don't trust the rally here.
Great company.
What are we saying here, guys? I mean, really, are we saying we don't want to add a 62 PE ratio in the face of a global pandemic on a consumer type company that we have to go buy burritos at and have other people make the food? Is that what we're saying?
Yeah, great company once again, and a type of company that if you had a big sell-off globally in the market, you.
I was being completely sarcastic on that great company comment.
Well, I know you were, but like, listen.
People who love Chipotle do love
it. They do, and hey, listen, a strong band.
It's a cult following.
That's fine.
Really is.
Their burrito is not that good.
It's. I'm with you on that, Matt. Like, I don't know how they built this.
Filthy. Are you kidding me?
This brand and this cult following they have, but people who love Chipotle, they love.
Yeah, I don't mind Chipotle.
They do. There are 10 companies very similar to Chipotle that are within 2 miles of my house that make a better burrito.
Yeah, including the food truck downtown, Matt. I do miss the old
food trucks make the best tacos and burritos. Oh my God.
But Chipotle has this healthy experience. Listen, I like Chipotle.
A healthy experience burrito.
I agree with Ellen Hodgson here. If the nation actually knew what Cafe Rio was here in Utah,
Ellen, 100% agree. And I was one of those 10, Ellen, was Cafe Rio.
Cafe Rio makes real good food.
I just have one comment. Obesity kills in a COVID-19 world. All right.
And it does.
Give me Chipotle as my burrito eating choice over the better tasting.
So America got it right over the last 50 years.
So got what right? They America.
We'll catch up with that.
America. All right. Other companies with earnings that I think are actually just as fascinating. I don't even know where to go next, Matt. Delta Airlines, AT&T, Texas Instruments, even Biogen. There's so many we got to break down here. TXN, they beat and they expanded guidance is what I read, Matt. What else you get from there?
I got their earnings per share number pretty decent at 1.24 versus the expectation of 1.01. Revenue came in above the numbers at 3.3 billion versus 2.8 billion on the expectation. Actually, revenue numbers actually fell year over year by 7.4%, which is a very, very concerning number for any investor.
It is terribly concerning.
It's a very concerning number. And Tim, I know the article you're talking about on the guidance, but when I read the actual numbers on the guidance, I did not see that as an upgrade on their guidance. I actually saw that as a slight downgrade on their guidance.
You know what?
Maybe it's positive. Go ahead, Mark.
Today's stock market rally on the headlines, because if you watch Market Watch headlines, better than expected earnings. Once again, you have low ball earnings. Shock. I know this always happens.
Mm-hmm.
Well, we expected them to be this, and they beat. Revenue was still down 7%. And this is on the chip makers, because there's a lot of semiconductor companies, and we're going to have Intel's earnings coming up a couple days from now. That is not a healthy number. That is a terrifying number. So just because you beat low ball expectations out of Wall Street means jack and squat. 7% decline in revenue is not healthy for the economy. It's not healthy for semiconductors. It's not horrific. But it's not this thing to get euphoric about just because you beat low ball at Wall Street expectations.
Mm-hmm.
Like,
I find it noteworthy, at least the fact that I even have guidance. So many companies have been pulling guidance for the year. Interesting.
Lyft was one company today that pulled guidance for the year. And again, if you're a company like Lyft, pulling guidance is 100% understandable, because how in the world could anybody target what revenues and earnings per share numbers on Lyft is going to be at the end of the year?
Here, I'll give you a Lyft's guidance. Nobody's getting in your cars. There's your guidance.
Oh,
Was that a hiccup, or were you keeping yourself from saying a curse word in there?
I might have been a combination of preventing swearing, swallowing a burrito.
Yeah, I was going to say, I think that's more eating on the halftime
Trying to
report.
say something. Oh, listen, I work 16 hours a day. I got to eat sometime. I don't care. You know, I'll chew with my mouth closed. And I'm going to still order a Chipotle burrito today for tomorrow's show. Oh, I'm sorry.
All right.
I'm going to jack up those revenue numbers.
I read Delta Airlines earnings report as well. And I got to tell you, one of the most concerning things that I took out of anything I read today across all different markets and stock, Delta said they were losing $100 million a day during the end of March. Matt,
we should all buy.
Pretty concerning about the airlines here, right?
Well, I mean, we've been concerned about the airlines since the beginning of this pandemic, and that was before we shut down the economy. I mean, obviously the airlines are going to be one of those targeted industries that are just going to be just absolutely obliterated in this type of environment. Delta came in at a loss of 51 cents per share. Now, there were some headlines out there. It's like, well, it's positive because they were supposed to lose 72 cents per share and they only lost 51 cents per share. So let's buy because they were not as bad as they otherwise could have been. Yeah, I love those headlines on some of those financial websites. Revenues also kind of got beat up pretty good by they came in at 8.6 billion versus the 9.6 billion on the expectation. But the revenue numbers again, Mark, 18% revenue numbers down year over year, just an absolutely disastrous number. And what you're kind of seeing on Delta here is you're looking at a situation where Coach Frank would just literally just get all giddy and happy and start chuckling inside. You're looking at a situation here where you're really creating a really significant support level right there at about $19.10 by $20. If that level is broken, don't be surprised if Delta starts showing some price depreciation here. And so if you're an investor in Delta, you got to be concerned about these numbers, number one, but you got to be concerned about the technical condition, number two, as well. And the airlines guys, I don't care what that bailout is. These airlines, they're not coming back in the short term. Consumer behavior, corporate behavior, and this is the thing that the government needs to understand. You can say whatever you want about opening up the economy. Consumer behavior, just because 20% say, okay, let's go buy, that does not support an economic philosophy of bullish conditions. Corporations are not going to change their behavior simply because the government says something. Consumers, the vast majority of consumers in America are not going to change their behavior simply because the government says something. People, corporations, they're not just going to embrace traveling simply because you open up the economy. I'm very concerned about the airlines here, especially Delta, based on the numbers we saw.
Well, and in related news, I mean, UAL ended up selling some stock here. Talk about a bad trade. They had stock buyback programs at the all-time highs, Mark, funneling money in to the market. Now they're selling stock to raise about $1 billion in revenue. This is what they should do if they need money, quite frankly.
So is it buy high, sell low? Is that the new corporate investment thesis? Buy high, sell low?
Well, no, and I applaud UAL for doing it. And on one hand, it scares the heck out of me, because if you think, because this premise of government save everybody, government's money is going to prop up the market, which is basically the bullish thesis, right? Which is the overall bullish thesis. UAL and their group has said it's not going to be enough for us, and we need to sell 39 million shares in order to raise capital. Available lines of credit are not going to be enough for us. Government money is not going to be enough for us. And we have to turn to diluting our own shareholders' value through the selling of 39 million shares. That should scare every bull out there that has the uber bullish thesis. You better hope COVID-19.
Any bull that has the uber bullish thesis?
Oh, dude, of course.
Don't they have the I hope it's bullish thesis?
No, have you read any message boards? Matt, you've been sick. You haven't been reading message boards. Don't you know that this is going to be
even when I wasn't
and
sick, I don't read message boards. I don't listen to consumers. Are you kidding me?
Well, listen, they know as much as banks do these days. So like they give you a good pulse of what people are thinking. No,
they get their investment thesis from Twitter. I'm sorry. That's not a proper thesis.
But like,
Wait,
no,
Twitter is where all the news is, man. Don't you know?
But it should be very concerning that UAL has come to the determination that government bailouts are not enough, lines of credit are not enough, and we have to raise capital through diluting our shares. That scares the living bejesus out of me. And if this
it might scare it, but it's the proper way to go. If you're gonna sit there and buy back your own stock for the last 10 years, you should be forced to sell that stock that you bought to cover your losses. The government should not come in and bail you out. That is absolutely criminal behavior, in my opinion.
You know what I hate about a family-friendly show is I have to use words like bejesus. I like.
Oh, if we took the filter off, Mark.
Golly shucks, this is some really bad stuff here.
That was 1950s Mark analyzing.
Oh, it's all ski wampus, Mark. It is what
Dude,
it
if
is.
it was 1950s, Mark, I'd have a picture of Marilyn Monroe in the back, smoking cigarettes, drinking Jack while I was doing my job. God.
There is part of me that is surprised you're not doing that today.
So, what do you think this delicious drink is right here? So,
Mark, I'm surprised you haven't brought up AT&T yet today. They actually came in line. I know that you're a dividend, advocate.
I have two
naked,
full disclosure. I have two naked puts on AT&T that I sold on Friday. Clear down once again, way down. I think $22, $23, something like that. There's a really nice long-term support level, multi-year support level down in that range. So yeah, I'm selling naked puts. But once again, it's like everything I do. I'm not buying today. Screw that. But I'll sell naked puts today and be willing to take ownership at lower levels. AT&T, once again, not a great. I don't think anyone expected a great earnings report, but it obviously wasn't. I have no problem after earnings report buying it. What would $22, $23 be down? Another 20%. Or so, 23%, somewhere in that ballpark. So, you get clip another 23%, I'd become interested in. But no, I felt comfortable about those naked puts on AT&T. Probably will roll some more if they expire in May. So that's where I'm at in AT&T. Just comfortable at really, really low level.
I get it, guys. AT&T's been known as a dividend, all that jazz. But the decisions AT&T has made over the last few years is very concerning to that dividend argument. By going out there and spending upwards of $100 billion over the last few years on acquisitions of Time Warner and DirecTV at the top of a bullish market in the face of slowing growth environments was a massive, massive mistake to the value
do
argument.
I have to fight two bears consistently on this program every
you have to fight
day?
You have to fight at least one bear with analysis, though.
Oh my gosh, it's been just annoying for one, but now
I
got
two bears.
I'm sorry. Double bear.
I'm sorry. Listen, it does put a big dent into the dividend argument of AT&T when they buy growth type companies. And it reminds me of when Mark Cuban sold broadcast.com to Yahoo in 1999 at $95 a share. 2 years later, Yahoo was at $13 a share. When you buy growth companies at the top end of a market cycle going into a slowing growth environment, that destroys the dividend argument, in my opinion.
I'm a little bowl inside a bear sandwich.
Their revenue was down 4.6%. Markets obviously selling it just a little bit here, kind of a little consolidation. It's a fair point, Matt. It's a fair point. A lot of their acquisitions were highly questioned even by you on this show as they were happening. There's no question about that. Guys, there's many other companies we can talk about. The gaming sector I'm very interested in right now. I actually read a report. Give me SNE, Microsoft, anybody Sony makes the PlayStation, I believe. And they reported, Matt, and this makes sense to me, that actual PlayStation sales, the physical hardware was up 25% in the month of March, year over year. Microsoft, their Xbox One was up 25% in the month of March. That's a beautiful chart heading into the earnings here later in the week. But even some of the software components of this here, Activision, one of their titles, that Call of Duty title was just crushing it there for a little bit. Gaming has been hot. This is an area where at least I can map out a bullish thesis, and I am still excited. Matt,
Activision is by far my favorite company in this space, though.
Yeah,
by far.
Yeah, I like them too. I
like
got
to do something.
No, I've been pounding the table for potential naked puts down low. Once again, you guys are fairly bullish on gaming as a whole. Maybe not the greatest growth, but maybe growth, right? It just seems like one of those. I don't know.
Doesn't gaming fit the stay-at-home narrative, though?
But But gaming
Yes.
fits like lots.
I
of
went to Walmart and they were sold out of gaming consoles. All of them.
gaming fits the recessionary narrative. Gaming fits the stay-at-home narrative. Gaming fits the I'm a sweaty old 49-year-old man and I need something to do because I'm unappealing narrative. Like there's lots of narratives in which gaming just
That's an
makes
interesting
sense.
narrative, Mark. That last one.
So,
I don't even know.
I know you know what to say.
You left me speechless there, but it does fit all those narratives, which is why and it is kind of a take your pick, Matt. EA was on last weekend's options report with Coach Tyler. It's looking pretty good up here as well. I mean, there's
Nice
some
little flag
strength
pattern kissing off the 9 EMA there on the EA.
Yeah. Yeah, there's some strength in here. Somebody has to tell me what this Animal Crossing game is. I guess Nintendo released it and it was the #1 downloaded game last month. I have no idea what it is.
Tim,
I'm guessing
you
my
think Call
kids-
of Duty is the big games? It's those apps that get downloaded by our kids. Those are
Yeah.
the big games. I mean, can you guys tell me the #1 most profitable game? I'm not talking company. I'm talking game
Is
in
it
America.
Angry
I
Birds?
don't know that. I don't.
Was it
It's
Angry
Candy
Birds?
Crush.
Candy
Oh.
Crush?
That would be my second guess. Candy Crush.
Candy Crush. And guess who owns Candy Crush? Activision.
Do you have to like pay for little in-game purchases and
No,
stuff?
it's all. How many? Do you know how much money your daughters have spent on Roblox, Steve?
I need an audit of this. There's no. I have no idea.
I went through my iTunes purchases because I had to reinstate my daughter's Roblox account. There were hundreds of dollars in purchases over the last year in-game purchases that I was not aware of, that I had a very significant conversation with my daughter on. But no, it's what I call micro dosing transactions. Okay. The traditional gaming environment, and this really does remind me of companies that failed to evolve to ever-changing economic and technical evolutions. Traditionally, we go out there to Walmart like Cody did, and we go buy a $60 game, right? Well, guys, what the gaming industry has been doing is they've been going down to free downloads, and Fortnite was one of those first ones that kind of pioneered it. But they have these free digital downloads, and then you basically have in-game purchases of $1, $3, $5, $10, $20. And what people don't understand is what they're actually doing over the course of that lifetime of playing that game is they're actually going to spend a lot more money on those in-game purchases than they would on that upfront $60. And it's really created a good revenue stream for these companies like EA, Activision, specifically Nintendo as well. And so it was unlike the AT&T decision of let's go buy a traditional media company. These gaming industries are really kind of, evolving to fit the underlying changing scenarios within those gamers.
Yeah. Yeah. Now you're making me curious to go look at those Roblox purchases. There's no question about it.
You haven't thought about anything I said after I said that.
No, I'm sitting here wondering how much money have they spent on their iTunes accounts and all that.
If you don't think your daughters are not competing with my daughter on getting those nice little stamps,
and it's so simple to do too. They connect it right to your iTunes account. You can just use your thumbprint, and it's like you're in the middle of playing, and all of a sudden it's like you can't play anymore. It's like unless you spend $2. Very quick and easy if you're going to put their thumbprint on there, keep playing.
Yeah.
And then, like Matt was saying, those purchases start to add up. I mean, $2, what does it feel like? It's like, oh, it's nothing. It's $2.
Nobody cares about the $5 they spend a day at Starbucks until you see what the monthly bill is.
That's right. That's exactly right. Lots of other things that are grabbing my attention here, guys, but we've got a lot going on here today, including a webinar tonight. One of the most important things I want to do before the end of the show, just get your final thoughts here on the markets in general. Anything we missed, Matt?
Well, let me talk about that webinar really quick. So tonight at 7:00 Eastern, right here on Tackle Trading YouTube, I am holding a Magic Lines webinar. And this webinar is going to talk about magic lines. And I'm going to leave a little teaser on that. But it's also going to, most importantly, what I'm going to talk about tonight is the philosophical foundation on why trading works. So like if you are new to trading, because we talk a little investing, we talk some trading here on the halftime report, but I'm going to talk about trading, and I'm going to preach to the congregation tonight, and I'm going to make some converts on why trading works, why it is not a mythical, a randomized thing, and we're going to talk about the concept of magic lines as we build faith tonight on this webinar. I'm going to have a lot of fun. It's going to be very lively. It's going to be very high level. So if you have friends, family members, if you are new to trading, we're not going to go into a lot of advanced stuff. This is going to be a 101 type class, high level, but still some advanced philosophy behind it. I'm going to have a lot of fun. I'm going to probably be drunk while I do it. So bring your booze, bring your beer. Let's have a good old time. It's going to be Magic Lines webinar tonight at 7 p.m. Eastern here on Tackle Trading.
I absolutely love hearing that, Mark. That just
I
tickles
never,
my fancy.
first of all,
Thank
I
you.
never know whether to take him serious or not, or if he's going for a joke. Matt, it's always, I mean, they asked for us to take the filter off. By the way, we're nowhere near taking
That's
the
not
filter
happening.
off. That's not what is going to
Yeah,
happen.
you don't understand what Mark Justice Unfiltered looks like.
Oh my God. By the way, if you want to share that webinar and information with a friend and you want to point them in the right direction, I just dropped a link in the chat to today's Tackle Today email, some information about that, also a link directly to our YouTube channel. And in the chat, if you're Team Tackle right now, let's just make sure everybody knows when and what this is. Just write down 7 p.m. Eastern webinar right here, and just put that in the chat. Somebody, if you can do that for me. Final thoughts from you, Matt, if we can.
No, I think we covered most of what's happening in the market today, outside of earnings and what's happening in oil. Kind of a slow day in comparison to the last 2 days. I mean, the last 2 days, what was happening in oil was just absolutely just historic, to be honest. I mean, none of us have ever seen negative oil prices, even in those front month contracts. So that was absolutely fascinating. So a little bit of a slow day in comparison to the last 2 days, but the one instrument I'm looking at right now is gold, but you do have some pretty decent setups that we looked at today, and it's good to be back.
I got 5 headlines we missed real quick. If you are confused about this market, some of the smartest people in the world are. You have one analyst seeing a record S&P price in the 2021, but Paul Singer, billionaire, sees a 50% crash. Philip Morris was upgraded to a strong buy from a buy at one analyst. Listen, people, smoking might kill, but people are stressed out right now, apparently, to this analyst. Lionsgate Entertainment price cut from $22 to $10 at Deutsche Bank. Movies, theaters, they're just right there in the line of really, really hard, struggling times moving forward. Tyson Foods suspended operations at its Waterloo pork plant. We're seeing this a lot. Even as we open up, get used to rolling shutdowns as clusters emerge in different places. And a study out of China saying that there is evidence that the virus is mutating to some level and that there might be different strains impacting different sections of the country right now. Left coast, California, Washington, where we're out in Utah, a more mild version of the strain possibly, and New York, East Coast, a much more deadly version of the same strain. So those are some 5 headlines.
Last headline, Tim, then you can send us out. I'm downgrading Deutsche Bank from $6 to $4.
Like it a lot.
I'm so gonna go sell a naked put at $4 right now.
Oh my.
You shouldn't, because it's going to 3.
I kind of hesitate bringing this up because it might trigger us into another rant, but I saw a headline just now. I'm going to give you a last one. Morgan Stanley says increasing pollution over China means you should buy Apple computer. So,
oh Lord Almighty.
That's what was the headline?
Morgan Stanley says because they see increased pollution in China that they're assuming industrial production is back, and that means Apple computers are good buy right now because that means their production.
Thanks, Morgan Stanley.
Great analysis.
I mean, yeah, okay. So what Morgan Stanley is essentially saying there is that, hey, so production is going to be back, supply chain, but that obviously, I mean, that's not been my argument for 3. It's the demand argument.
It doesn't matter how many widgets you create if no one's buying them.
That's right,
Thank
Cody.
you, Cody. Like,
Thank you,
like
Cody.
a good Texan, you know?
Right. I love it. All right, guys, great show today. Matt, great to have you back as always. And guys, we're here every day. If you're new to our channel, subscribe, click the bell, come back and join us. And if you want to join our pro community, as always, standard offer, there's a 15-day trial link in the comments below. We will see you tomorrow.